the whole industry is just starved for action in such a way that they're like, as soon as anything gets a little momentum, it's just flying.
All right, everyone. Welcome back to another ep of Empire. We have Dan from CMS joining today. Dan, what's going on, man?
Nothing. Like we were talking a little bit before this, market's still up, so everybody's pretty happy about that. Hopefully it'll be spring soon, so I'm happy about that.
No complaints, huh? For a Bostonian who's freezing his ass off over there.
I know. It was like 65 degrees like a week ago, and then it went to like, I don't know, like 10 or something like that. So it was a real emotional swing.
Yeah. Well, before we jump into the pod, man, I feel like congrats is in order. You survived when a lot of your comrades did not. So
I know. Yeah, pretty happy so far. I saw that I was actually chatting to Abby, who was on. I was on this recently with you, or I don't know, it's probably 6 months now. I think the only reason like we made it out the other side is I started trading Bitcoin forever ago now, but in the beginning, exchanges didn't like rob you, but they would just get hacked like catastrophically, sort of every 6 months. Like Gox, everybody remembers, but even before that, like Bitflow was really big, like they got like crushed. Before that, it was the one that Bitfinex turned into, and then Bitfinex got hacked as well. It's anyway, like the whole point was like you sort of had to mitigate your counterparty exposure on exchanges, because like you could never trust that your sort of capital would be preserved there, and it was like a very like high risk, right? Like you sort of like made the assumption that one exchange would rob you if you were using like 5 in any given year, and you like had to sort of expect a catastrophic loss of funds for stuff that like you were parking at. So like while we like used FCX and like we were very involved, like we were investors in them, and like we had capital parked there at the time. Like when it went down, like we had an amount of like balance that we were able to like eat, right? So like it was never in our thought that was completely safe. We didn't think it would end up being a case of like fraud, but we did think that there was like a potential like security risk, right? Like the cold wallets get compromised from some random thing. You'd be like, well, they're supposed to be cold, but like shit happens, right? So like there's always the possibility that like the funds are lost because of seizure, hack, but most likely hack. But anyway, so that was like why we were able to sort of come out the other side of it, even though we got dinged, sort of just like everybody else did. So we self-custody a lot when we can. Maybe use some of the custodians, but that was the big learning lesson I think a lot of people got from this. That people from the past sort of had just like archaically kept around.
Yeah. How badly did you guys get dinged? If you can talk about that.
I think it was about 15% of our AUM. It's hard, right? Because like, what do you mark everything to? And actually, to be fair, like we're not even entirely sure how the claim is going to work. Because like it was weird. The last 48 hours, you kind of had like this weird period where you knew you weren't getting your money out, like withdrawals were not happening, but you could still trade. So like you had this odd incentive where you were trying to lose as much money on FTX and like make it away, right? So like the one that like I really like popular on Twitter at the time was like, buy Solana on FTX and like sell it on Binance and like try to get it. And like we were doing all sort of like weird pair trades for wherever we could get borrow, that we could like sort of do delta neutral. So we ended up with like a really weird grab bag of stuff like on there, and we don't know how that's going to be marked or like what the claims are going to be on that. So I don't know, like 15% sort of like our best guess of like where it falls.
I'm curious, Dan. We learned that Galois,
Gawa, I think.
Yeah, Gawa. Yeah, weird name, French. My French's terrible, even though. Anyways, he sold his stake for 16 cents on the dollar. He said, "Look, there's smarter people. It might take forever." What do you think of that? Do you think that's fair? Would you take it?
Yeah, it's a good question. So you got to remember, like, there's a time value of money, right? So like, let's assume like you're looking at 5 years, for like the process, which is probably ballpark sort of estimate. I mean, Gox, for instance, is still going, right? Like we're 10 years on that. What I've heard from people that do this sort of for a living on the bankruptcy side is like the fastest scenario you'd ever be looking at is 2 years. So anyway, let's say 5 years for like simplicity's sake. Like if you think you could make 10% a year in the market sort of on your money, right? Like that's sort of a 50% return that you have to like bake into taking the cash today, versus like whatever you potentially get if you like bring it to the end. So like, I don't know, like in terms of like a trade, like what I think Kevin can like sort of make on the money otherwise is probably like a coin flip. I do actually tend to be the assumption like that money is probably mostly going to come back. So like if you were to like make a market on like where it's going to land in 5 years, I'd probably get like in the 75 cent to like 80 cent mark if I had to like make something. But like you can use the money for stuff differently today.
Then compound.
And you don't know how like the treatment of stuff's going to be. I think what we've sort of like found since like the dust has settled on this stuff is there was more money than they thought. And some of the assets like aren't as terrible as they thought. So and that seems to be like good factors in front of it. Like there's just like a colossal amount of like venture bets that are made in that. So you sort of just have this broad basket exposure for the stuff like as it plays out over time. But it's just going to be a long time. And I think Kevin like wants to move on, which I totally understand, right? Like I don't think he wants to be managing a bankruptcy claim for, I don't know, however many LPs he's got for 5 years. Like I don't think that's like a great use of anybody's time. And I'm not even like entirely sure. I don't know because I haven't spoken to the LPs, but I guess like they're okay with the idea of like, look, like we're just gonna like rip the Band-Aid on this and like move off. So I think like it's like less an economic sort of decision than it was just like this like the rational sort of way to do it. But I've heard they traded up to like 22 cents. I actually don't know how people are trading the claims because we don't even know how the treatment. I mean, I guess if you have dollars, it's easy because you have a dollar claim. But like if you have any other basket of stuff, like it's like I've heard like weird scenarios from like people that are legitimate like players outside of crypto that do like bankruptcy stuff, that like the composition of the assets. So like here's an example of like a scenario we've heard, which we don't know if it's going to be true, but it came from a very reputable like person who was saying that because of the way that the agreement was struck and effectively like you owned your assets like on FTX, the way like your user agreement was written, that there's a world that like, let's say you had 100,000 Solana on FTX and like the bankruptcy goes through like all their stuff and they go, oh, like we have 5 million Solana, but you may get all your Solana back because they just pay out all the Solana pro rata to all the depositories, and then the rest of the stuff gets handled. So we don't know if that scenario would play out. Like that like seemed to be a little more like of a weirder tack that it might take. But anyway, there's just open risks on this stuff, which is also why these claims are trading cheaper than like necessarily what the implied value of them would be if you held them to expiry, because there's a lot of unknown stuff that can come up in the bankruptcy scenarios like that, or like,
yeah,
look, I mean, there's still like, there's been chalk of clawbacks on like withdrawals that went out over like, I mean, like the 90-day period seems crazy time for customer activity on the thing, but who knows? Like maybe they're like the last 48 hours, like we're gonna change stuff. So there's a lot of unknowns in this stuff that's like just beyond like, will they have X access? Like they have X dollars of like stuff, and they have like Y liabilities. Like how does like the claim work? There's like weirder things that have to be thought through. So I'm like very curious how people are actually trading these, unless they're just like pricing them so cheap they're like, we can eat some of these.
It's for baked in. So right, if I heard you correctly there, so there could be a scenario where they might recoup like 90% of the Solana, but 20% of another coin. And so if you had Solana, then you're going to recoup a higher amount versus the other person that has the other
Bitcoin
coin.
or something like
that.
Bitcoin
Yeah, or Ethereum. And, you know, it could be a weird waterfall that each investor gets a different amount.
That scenario got floated to us as like a potential. Like that being said, the person who stated it was like, we have no idea, but this is like a viable legal strategy that could like be sort of like right out there. So because like we have like talked to people about the potential of like selling our claim, but again, like because of the unknowns and like the haircut on it, and like we also just like, because we're managing our own capital, we'll just like sort of sit on it. Like we don't have as much of a necessity, I think, to like get a bid on it. We were looking though to see if there was anything interesting, but it's just gotten like haircut too much that we're sort of taking a tack now. In the beginning, I think we were more likely to have like hit a bid, but I don't know. As like stuff's come out, we're like, might as well wait.
Yeah. So I was in a Twitter space with you earlier this year, where I think you had mentioned that you had gone up a lot to stable coins, or actually you went to stable coins and you went to fiat when there was this whole kind of situation with Silvergate, and you know, and then you said, no, we actually are now fully deployed into the market. So I'm curious, maybe transitioning a little bit into just what your general take is on the market. You know, we rallied quite a bit, I think 100%. You know, E sort of bottomed at 800, now it's at 1600. All other assets have performed similarly. So I'm curious, like, what's your current thinking on the market? You know, narratives or themes you're excited about? Just general open-ended question.
Yeah, so I think if I had to say like, if you had to like summarize just like aggregate price action for like the last 3 months, I think you had a lot of forced sellers, and you had like basically 100% the sort of margining of the ecosystem, right? Like if you had any leverage on, like you had to take it off And I mean like leverage like on the way down. Like we touched every potential like liquidation for sort of everybody. So all that forced selling had to go through, and like that pretty much abated. Like when FTX blew up, like that was sort of like, all right, like everything's gotten licked that could get licked. So that like put like sort of the floor in it. And then absent that, like you sort of like steady state of demand, and like people who are looking for sort of like lower levels, like step in, and we baseline higher, right? And then like we recovered some assets, like doubled, like Bitcoin put in, I don't know, what is it, from the lows, like 40% or give or take. Anyway, and now you're at a point where there's like this rebalance of like supply and demand. But I think the bigger thing of like why you can be cautious about this being like a whole new bull market is there doesn't really seem to be like a ton of like new participation sort of in the ecosystem, right? Like you're definitely not seeing like a ton of retail participation. Like you're not seeing sort of that behavior like flowing through. And you're not, I think, seeing much like institutional interest sort of in like moving things going forward. If anything, you've seen like an abatement of like crypto became a little toxic for anybody to sort of like optically be involved in, especially like on the institutional side, especially right now with like all the regulatory stuff sort of like swirling and landing every other day. So that's like definitely slowed. So I think you've got the end of forced selling, but no real new demand that's moved in. So like I don't think we're gonna like go test the lows and like move like materially lower, but like I think it's the same pool of capital largely like swirling around different things sort of now. So I don't know, like if you had to like make me put a price target like on Bitcoin and ETH like during the summer, like I'd wager it stays like pretty close to where it is. And then you'll just like keep playing this like merry-go-round with like other assets that like people just get excited about randomly. Like I don't know, like stuff like people are doing, like there's very much activity, right? Like there's assets like flying around and like doubling over the period of like a couple weeks and like stuff like that. So like people are here and they're interested, like, and this is like sort of the people that survived the sort of last 6 months to a year. They're like very much like in it and sort of playing the game, but I don't see like material new money moving the needle anywhere. And you do have good inflation still, right? Like there's still like assets that like these things do like throw off emissions.
Mm-hmm. Do you think the forced selling is over?
I do. I think Voyager's still working out of some stuff. There's the world that like some of these. Here's the thing. So the bankruptcy has like a weird caveat to it, right? It locks up a lot of assets effectively, right? Like a lot of this stuff just gets stuck in these like court things, but like it doesn't mean it's stuck there forever, but it will be like sort of broadcast and like slowed down. So I do think like, I don't know how the bankruptcies will play out for all these guys, but like some of these assets are slowly going to be like worked out over the next years, and like that will happen. And there's a bunch of stuff like randomly still held by like the government that's got to get sold. But anyway, like those will be like big slugs of supply that sort of come out there. But I think the idea that like people are like meeting margin call and like they're all getting licked and like they owe capital elsewhere, like I think that's like done. Like, I mean, yes, people have gotten themselves into like hot water again potentially, but like, I don't know. Like if you made it out of that sort of shakeout, you should be okay now. Mm-hmm. You're definitely better than wherever you were 3 months ago.
Yeah. What do you think? What catalysts are you looking for as an investor? Like when you like, we've seen some like pockets of the market and narratives really be very hot, like you know, liquid staking derivatives like Lido and whatnot. Like it was just, you know, pretty hot, and then you know, part of NFT infrastructure, like the whole Lido, the whole Blur situation. I'm curious, like as an investor, what catalysts do you get excited about? Are you looking for to maybe put on more size or kind of trade around that?
Yeah, I guess like I think of it pretty simple still, where if you've got like a sustained like repricing of risk assets outside of crypto higher, and then retail participating, or even just like the existing people in the ecosystem like getting wealthier and like participating, I think like that's like the big catalyst you're looking for. Like if the stock market starts making new highs or getting close to them, right? Like I think it'll be game on for like risk assets and like specifically crypto on the back of that. Or if there's suddenly, like, here's the thing, it's always something you never know, right? Like DeFi summer kind of like sort of just was born out of nothing, and then people went berserk over it, and it sort of brought us into this whole new wave. Like halvings, I guess, are like sort of like known broadcast events that like do stuff, but then even like NFTs kind of just like it's very hard. It's not unknown, but it's very hard to know what will be like that thing in 6 to 8 months that suddenly like drives a whole new wave of people sort of interested. And my gut would be like, there's not a ton of reason like guessing what it is. It's more just knowing that there will be at some point.
Well, you could argue DeFi summer didn't come out of nowhere. It came out of, I mean, it was just macro, right? It was like COVID, money pumping, Bitcoin starts to rip, and then that turns over into DeFi.
Right, but I don't think you know at the time. Like it ended up like in hindsight, it looks like very simple, but like I don't think when you're in it, you're like, oh, like this is like Compound launches, and you're like, wow, this is gonna be like wild. And you kind of like at first, like everybody was stupid, right? Remember they launched them, they're like, this is the dumbest thing ever, and like,
right,
yeah, like, and then suddenly 3 months later, you're like, everybody and their grandma is talking about yield farming, and you've got like people putting dedicated $100 million funds into like, I don't know, it can happen very quickly.
Yeah. Where are you looking for value right now?
Yeah, so I think a lot of it is just like this capital rotation game that's like being played. I don't know, like you see it somewhat like, I don't want to like look at anything true in particular, but like right in this exact moment, like STX is like the thing, right? Like block stacks and suddenly like the rage again, and it's like semi-related to ordinals or whatever, but it kind of doesn't even matter. So like the whole industry is just starved for action in such a way that they're like, as soon as anything gets a little momentum, it's just flying. Like you saw with Aptos before that, right? Like, and a lot of it isn't necessarily driven by any underlying economic sort of activity. It's more just like people want to speculate and they haven't had like a great thing to do it on. And like, as soon as they get the opportunity, they're just like in it. So it's like happening very quickly. It's like rotating through. So just figuring out where that is like going next is like, and not even necessarily like being first, but just like catching it as it starts to happen.
I feel like we've gone from this like hot ball of money to like this nice lukewarm.
It's tepid. It's like, it's that like who's like left.
Is that from it? Like, you know, there's obviously this like, call it a cognitive bias or like this phenomenon where if you've lost and you know, you're more inclined to take outsized kind of stupid risk to make it back, like revenge trading or whatever, make it all, make it all back in one trade. Is this the phenomenon we're seeing? Like, if there are no new market participants, are these folks just like willing to rotate money much faster to make sure they're catching these narratives?
There's probably some of that. There's probably some people that are looking to like sort of revenge trade sort of back. I also just do think this is like the default of the industry. Is like if you just like let the participants sit there long enough, like they'll find something. Like I think they were buying testnet, right? Like I mean, they're just like real buying the thing. Like, and like, you can be like it's still, but like I don't know. Like there's definitely a demand for it.
Yeah. You so for context, you know, you, to my understanding, CMS, you guys invest both in the public and private markets. Talk to us a little bit about kind of the relative value you're seeing in both of those markets. How are you deploying the incremental dollar? Do you see more opportunities in the liquid stuff, or, you know, private opportunities?
Yeah, the liquid stuff's still cheaper. Like, especially given like the liquidity you get with it, and just like the base sort of like nominal value that this stuff is traded to historically. Like, if you look at it from like peak to trough, like yeah, like I mean the highs are not like what you should like benchmark everything to, but like the sort of like relative cheapness to like, I don't know, some trailing crypto total market cap in the public side of things is like much more still drawn down than like privates, at least from what we've seen. Like private valuations never like they never really have like this like crash. Like they've come down, and like I think you see less people raising like opportunistically, but like stuff's still not like sort of arguably cheap relative to where it trades on a comp like in the public market. That would be my guess. So I still think public stuff's like much cheaper relative.
Yeah. What about the secondary market? Like a lot of going back to this idea of forced selling, you know, people that need like FTX Ventures, for instance. Huge.
Yeah. I don't know. I just haven't heard about too much of it trading. Like we've actually reached out to a couple things, and like it either isn't like sellable, it's like not structurally easy, or like the foundation doesn't want to do it. So I don't know. I think there's probably opportunity there. It's just you probably are gonna like if you wanted to deploy like $100 million into like buying cheap stuff in secondary, then you probably need like a really good lawyer and like sort of a lot of ties to like make it sort of happen. So I don't know. Like we've just seen like it structurally doesn't like trade enough. I don't know. Either the projects don't want it and don't endorse it, or like the sellers like have so much tape that they don't do it. I mean, that being said, like it does happen sometimes.
Like I think of you guys as a liquid fund, like more of a hedge fund trading around things that then got into venture as the market was pumping in 2021. Like, do you rethink your venture strategy at all, or are you going to just do the same strategy going into the next cycle?
We'll probably just do the same thing.
Same thing.
Yeah. I mean, we fell into the same trap that a lot of people did, where, especially if you, for our situation in particular, which I think a lot of individuals sort of have a good corollary to, is if as you make money, right? Let's say the market's going up and you have assets and you're making in general, most people's P&L is pretty tied to just the aggregate price. And you're investing in venture at the same time. If you run into a situation where let's say you make $1 million and you put $500,000 into venture, you still owe $500,000 in taxes at the end of the year. So you effectively have made nothing that's liquid by the end of it. So you gotta and especially if the market pulls around, right? When suddenly you're losing money and you have less liquid, you gotta you very much have to be cautious of how much you're sort of shipping out the door as the market is going on. I think a lot of people fell into this trap and ended up entirely illiquid by the end of it, just because they had burned, they thought sort of those good times would keep rolling, and we all did, and they did roll for a lot, but you end up very much with an illiquid asset composition of what you own by the time it's all done, the dust settles.
Yeah.
So you gotta watch that that doesn't happen.
Yeah.
Because a lot of the problems that you do see, right? Alameda's problems are ignoring what they did on the customer side and the sort of issues there, but they ended up with a basket of assets that were illiquid against liquid liabilities, and that was the story of sort of everybody. DCG Genesis had the same problem. 3Rs had the same problem. It was a lot of this really bad bucketing of what you needed liquid. This is the last crash was as much a credit problem as it was a market problem, price.
Yeah. Let's talk macro for a sec. 6 months ago, or whenever you were on Empire last, I don't remember the exact. Let's call it 6 months ago. You said that the midterms were a really interesting factor to watch. Is that what are you watching right now in macro? Is it more inflation? Are you thinking about the midterms? Are you what are you thinking about right now?
Well, we're on the back right of the election cycle, so that.
Excuse me, not midterms. Are you starting to think about the next presidential cycle?
No, it's too far.
Too early.
Yeah, and they're really that's this time next year, probably that's that conversation. Yeah. I think we start doing. I mean, I think the bigger thing is just what are the larger risk assets? What are equities doing in the States? What are sort of rate expectations going through? That being said, we do not tend to have any edge there or know what's going on. Yeah. But those are driving a lot of risk decisions of what crypto's beta is to just equities at a given point. So yeah. I mean there's random one-off stuff coming, right? You've got this debt ceiling fight coming at the end of the summer. That's a thing that will probably cause other risk assets to move. So it's good to know it's on the horizon. But
do you guys trade around something like the debt ceiling fight? Are you guys going to trade around that, or how do you position yourself going into that?
We won't probably. If anything, we'll just take some risk off into it just in case. We want optionality into it, but I don't know. We don't. Like I said, we don't think we have any edge in any of this stuff. So we just know it's there, and we can sort of take we can aggregately cut back our risk or add to it if we think maybe we have some upside on it. But in general, we're not doing a ton.
Yeah.
But also it dominates the conversation, right? So if that's everything that's going on in the market per month. It doesn't matter what's going on in some random obscure part of crypto, you very quickly lose focus.
What about just the landscape for, and Santi, you probably know this much better than I do as well, but the investing in, or the trading landscape, where's the flow of money right now? Who's still lending? Who are the big OTC desks? Is it the exact same as it was a year ago, or it's flipped on its head, or it's just same thing, but some players have removed themselves?
So I mean, I'd say the larger OTC sort of market is kind of the same, except for the people we lost. Galaxy's still running, Cumberland's still running, Jump is still running, Wintermute's still up there. You lost players for sure, but in general, I think actually the spot, Falconet's still there too, right? That it's kind of the same. Amber made it out the other side. That seems to be, there's nobody lending though. The lending market's dead. That's going to be a bit. It's just everybody's got a bad taste in their mouth for good reason. I don't think you could have run a lending book through the last 18 months and not lost a considerable amount of money. And if you didn't go bankrupt, you're just happy. So like that's not great. And like a lot of the problem there is like so much of that is tied up in courts now for like a very long time. Like there's probably a very good opportunity for somebody, right? Like there is clearly, like if you think of all the things that had product market fit in crypto on the trading side or like the market side, it's like trading obviously, and then like lending and like staking. Like those are the three things that like make money, that are like clear businesses, and like one of them just has an insatiable demand for it, and like nobody's doing it right now. Like I get, you still have the DeFi stuff, but like the bilateral sort of like model.
Yeah, like I've been thinking a lot about this. Like if you're a founder out there, some of the best opportunities are like you pick up some of these ashes and build. It's not to say that like the business wasn't bad. It was just that they had terrible like risk management practices, and it was just the founder or the team was not the right one. But these businesses actually like work and can work extremely well. There's like voids in the market from liquidity standpoint that need to be filled and addressed. And I think the common denominator of BlockFi, Voyager, like a lot of these players just went down, not because there wasn't product market fit, to your point. It was just like they didn't have risk management.
Yeah, they died by the wrong reasons. They didn't die from like apathy of the market, for sure. Right. Yeah. Look, I mean, FTX, like obviously massive issues, but like still they raised $2 billion of venture capital, like, and they were throwing off hundreds of millions of dollars a quarter in like fee, from like sort of the exchange. Like that was a business. And like the lending ones you could like argue, or I guess were maybe like less sustainable, but there definitely is like a nugget of like a real sort of business there. Yeah, to your point. So like, all right, somebody will get it right. And I hope they do, because like it was just these were businesses that we leaned on a lot. Like it's like made our lives like a lot harder.
Yeah, absolutely. It hurt the same.
Yeah, and like the concentration risk is pretty bad right now, in terms of like service providers for this stuff. Like you kind of have to use Binance and Coinbase. Like that's it. Like that's not great.
Yeah. Speaking of Coinbase, like what do you think about their base launch? And I don't know if you have an opinion there.
I think it's great. I'm pro it. I mean, I don't know where it's going to go. I think everybody's like, I think people are drawing too far into the future on the whole thing. I think it's a cool project. I think it's smart. And like worst case scenario, they burned a bunch of time. Like, I don't know. I'm super pro it. I don't know where it's going to go. I'm very curious. So here's the thing that I'm very curious about is like, what is they said they want to like eventually drive it to like community ownership sort of thing, right? So like, I want to see how they do that as a public company under massive scrutiny, how they like actually move something towards like decentralization with like everybody's eyeballs on them, right? I think that'll be like a very good tell. And I think it'll be great if they can set some precedent for it.
Yeah. Yeah, it's almost crazy that the day they announced this, like the stock was down, and like there's obviously noise, but it seems like there was a big like disconnect here where everyone in crypto was like, okay, this could meaningfully bring a lot of an entirely new revenue line for them, and the way they could monetize their user base and being this gateway to Web3. And then Wall Street kind of just didn't appreciate it. It was like, meh. Like,
yeah, I think they just look for like Coinbase is just so driven by its short-term ability to like generate revenue right now. Like, I don't think anybody that's like serious, like trading that stock in any like size, like gives a shit about anything years out right now. Like, I think they're just like very much like a solvency concern for like the 18 to 24 months, like sort of thing.
Yeah, I guess you look at the bonds, you look at, it's very
right. Like look at it from like this. People aren't giving them a ton of rope.
No, not at all.
Right.
I am curious if there is a trade there. Like I've always asked, like over time when I look at a new investment opportunity, it's always like, you look at miners, or you look at exchanges like Coinbase. Does it outperform ETH? You look at a private company, like does it outperform the underlying, which is Bitcoin or Ethereum? And then I'm curious, like if you had like a new pool of capital, would you buy Coinbase stock? Would you buy Ethereum or Bitcoin, or like maybe just like let's start there.
Yeah,
like what do you think outperforms?
That's a good question. I would wager that Coinbase would outperform ETH and Bitcoin in a rally at this point. I mean, I also, by the way, I own Coinbase, just like it's full disclosure. It's been terrible, but like I would wager that would sort of, because if you think about like how stuff performs in like a rally, right? It's like, and this, we don't have a ton of data points to this, but it's like Bitcoin does well and does a little bit better, and then like the long tail of the assets just goes berserk and stuff like goes up 100,000x sort of stuff like that, right? Like the further you go out the risk curve, the like more stuff sort of like moves out, and like Coinbase is further out the risk curve than so that would just be like my guess is like it has positive data like over 1 to Bitcoin and ETH, which is sort of like the index at this point. That'd be my guess on it.
Not to mention, if you're a U.S. based investor, you can do much more with Coinbase stock.
Yeah,
it's useful. Like it's more useful. You can, borrow against it. You could do more stuff that presumably has less counterparty risk than if you want to do some exotic stuff with your ETH or Bitcoin.
But Dan, you think Coinbase stock is further out on the risk spectrum than ETH?
Yeah.
Is that your crypto nativeness?
Wouldn't it be
philosophical?
if I'm an
that's like a fact. I'm like, I'm not even like I think that's just. I mean, like Coinbase can go bankrupt, ETH can't. Like, I mean, like that's like the difference.
Dan, I think is this the correct answer, or is this the Family Feud answer?
This is the correct answer. This is like very few things that I think I can like definitively say, but like
the factual part of the episode.
No, it's like when you're
doubles, like
I think traditional investors would disagree with that.
That's fine. I mean, that probably look when Coinbase was 4x, that probably wasn't a realistic argument. But like where it's trading now, I think so.
Yeah. Huh.
I don't know.
Would you buy the stock or the bonds?
I'd buy the stock.
Yeah, or like sell puts or whatever, and then clip a coupon. It seems like a better.
If I'm in it to win it. So I'm gonna.
Dan, does basically all the L2 announcements, like, so you like Arbitrum's ripping, like Optimism stuff is interesting, like Coinbase's base announcement, and then like, like all the, does basically like the L2s change your view on whether or not people will just like punt gig along on L1s in the next cycle, or you think that's just something that happens in cycle?
That's a good question. So this has been like the big one on the hangover is like, when demand for like smart contract space heats up, right? Like if the base chain fees are $200 for a swap again, do people fall over to Optimism and Arbitrum, or do they fall over to like Solana and AVAX? I am still of the opinion that it will flow to the other L1s, like as like people sort of move out the risk curve. But I do think that the other L2s will eat a good chunk of like what that volume would have been historically. That's just how I feel right now. I will see how this like actually plays out. But like I sort of view the other L2s as like L1s as like far as a trade. Like I don't know. I just like kind of like treat them very like similar. I don't know. That's like my thought on it. I don't know. I feel less strongly about that than I did historically.
Yeah. Do you have a take on like an ecosystem that you really like outside of ETH? Like, do you really like what's happening in Solana or like Cosmos or Arbitrum?
Yeah, I mean, like we have a lot of bets in Solana and AVAX. Like that's like definitely like where like we parked and like we do a good amount of work. So like those are sort of where we've got the most like vested interest and like where we spent the most time. That being said, like we have done a lot in sort of Arbitrum and Optimism now. Like as a function of our time, it's like more. So I don't know. That's like probably why I feel less strongly about it.
Yeah.
When you so from a portfolio construction standpoint, are you sitting on any cash or are you fully deployed?
We do. We've got like a probably I'd say about 15% in like cash, like sort of at the moment. Yeah.
15. Are you comfortable holding that in stable coins or in a bank?
No, we have it in the bank right now. Yeah, like
yeah.
I check every day to make sure we're still on the economy. But yeah, like that's like where we have it. We do keep something like stables. Like we just like I don't know. If we don't have to have it at risk, we just like don't have it in the
especially because to me it's still fascinating the yields on DeFi. Like if you wanted to clip a yield on your stablecoin, you're getting treasuries. Like it's crazy.
You're absolutely not being paid for the risk. Like,
definitely not.
It's not
so when we talk about risks, one of the things that has been percolating much is this idea of a regulatory clampdown and more pressure. And so I am curious if what you think about that. What is kind of your different scenarios and kind of timelines of how this evolves?
Yeah. I don't think we're done. Like I think there's probably still some in the works. There's probably some like I hope it doesn't, but I'd be like shocked if like Coinbase comes out this whole thing and like didn't get an action of some sort, right? Like that seems a little strange. Like Like they're doing a lot of the same activity that a lot of the other people are being sort of criticized for. And like I don't know the specifics of like the legal and like all their setups and all that jazz, but like I don't know, like Kraken has a staking program and they're getting hit about it, and like Coinbase has a staking program, and it's not like I'm like less clear that like everybody. I don't think like the dust is settled and like all right, like we're on the back half of this. Like I think this is still an ongoing conversation with like a lot of different sort of parties and like government agencies. That being said, I think what you're seeing right now is there's a lot of weakness in crypto, right? Like everybody's lost a lot of balance sheet, like everybody's like doing much worse like financially. And regulators are not happy about what's going on, which is fair. Like there's just been a lot of outright like criminal activity, and like if not criminal activity, like a lot of losses for like a lot of people in their jurisdictions. And they're coming in and they're like taking off everybody where they can with things that they know like they either can't fight or like won't fight. And it's not a terrible strategy from their point of view. I don't like it, but like I understand sort of like how they're using this to like establish precedent and to like get their hooks into everybody and make it seem like they're policing what they're supposed to be policing. So yeah, it's probably going to be bad for a bit. But it's just like it's tough. Like it get very hard to operate in the United States. Like I don't think it's going to get any easier for the foreseeable future. I mean, there's like rumors of like a massive Binance settlement sort of you keep hearing about that's like sort of out there. Like there's clearly a lot of smoke going on with like a lot of these like different things. But the stablecoin stuff is probably the most egregious like overreach I think that you're seeing out there. But like that'll hopefully go to court. I do hope that like some of the well capitalized players fight this stuff, right? Like that's like the only way like you can like slow it down and like make your case. Because if you just keep like rolling over and paying the fines as an industry, like then you're beholden to whatever they like sort of like thing, right? Yeah, exactly. So I do hope a lot of this stuff like, which is why I think it's good to see Coinbase in particular has like the legs to fight a lot of this stuff. So like I do hope that they will.
Circle as well.
Circle too, right? Correct. Yeah. Well, like what is Circle if they have a stable coin that's like a security? Like it's nothing, right? Like they have to. Like their entire like their existence like rests on the concept that that's not true. So they're going to have to take that score. Paxos as well.
Yeah, definitely. Yeah, it feels to me like I've heard multiple takes here. One of them is like the SEC really doesn't want to deem all these things securities as much as like Gensler was out saying that, only Bitcoin is kind of not a security because, if you force everyone to be a token, like a security issuer, I guess every token issuer register as security, like it's a massive operational headache overhead that they have to then embark on. And they probably are just better off clipping off these like operating under this, not providing guidance tends to be a good strategy because then you just go to pick a player, you go to them and then you get like 20 million and then you fund like the operating budget for an entire division then and there. And you keep doing that over and over. And it's, it's like,
I think you want
an incentive standpoint, like it's not a bad strategy. Like, would it be terrible if everything was deemed a security? But if you do that, then you provide like very clear guidance and procedures for these token issuers to register as securities, would that be so terrible?
Yes. And here's why, because I think the knock-on effects are like the problem, right? It's like you can't just like be moving them around like as like bearer instruments then, right? Like that, like, it kind of like fundamentally like destroys like the value prop, in my opinion. Like unless they like carve it out and they're like, all right, like this is the thing, right? Like if you force them into the existing box of like what securities are, it doesn't like work. But if you like make a carve out and you're like, all right, like these are securities, but they're crypto securities, and we're gonna let like this sort like these like things not apply to it, like that would be potentially a good outcome. I don't know, but like I think if you try to shoehorn them into the existing box, and like I think that's actually like a real problem.
I definitely agree with you, and there are great kind of threads about token issuers that have gone through this path, and it's like when you try to shoehorn it just doesn't work and it becomes entirely problematic. But yeah, in a hybrid approach where you like do some modifications, in my mind, wouldn't be that bad of an outcome. Just to get clarity, like how many potential LP conversations have you been on over the years? Like, how much capital do you think is sidelined? Because they're like, at this point, probably a vast majority of players believe in this technology, in the asset class, but are on the sidelines for this particular reason.
I think it's a good amount of money for sure. And I think like that like leads us into so many like open compliance holes. I mean, like realistically, I think we're at like a point where like I think you kind of need Congress to like weigh in. Like it's kind of got to like be their decision. There's just like not a lot of appetite to do that, and there's like it's not an issue, frankly.
Well, you were talking about how important midterms would be. Like in the next election cycle, like if your constituent base is really like young folks that really like this stuff, it becomes like very good political currency to go out and be like pro crypto. Does that happen? How far away are we from that?
I think we'll scenario. Yeah, it's just not. It's just like not an issue for like enough people. You know, it's like it's definitely like you can come out and just be like I'm pro crypto, and then like it's okay. Like it doesn't mean anything, right? Like you know, like they don't like act on anything else because like Congress is like it's just like in the like tiered ranking order of things that like they care about. Like that is like the general public like wants to see like action on. It's like so low, and it's even lower now because now it's just like why are we gonna like wade into this thing that's just like a tire fire, right? It's like it's worse now than it was 6 months ago.
Yeah,
you know. I don't know. I think like that's like the drawdown to like the aggregate pricing now, but like also just like the industry like sort of like cannibalizing itself is like there's less like political will to get something done.
Yeah, perhaps shifting gears, more of a personal question, but if you were to like start a fund today, would you do it?
No,
given all the complexity, given all like most people think crypto is easy. You're like, oh god, like you know, it's really not. It's very hard. You have to think about and learn about a lot of things, and if you don't learn quick enough, you get slapped in the face over and over. And so, yeah, you just answered the question. Like, you wouldn't. Start. I mean, what would you do?
I think I would do it like the same way I do it now. But like, I mean, like I enjoy what I do. Like there's no like doubt about that, right? Like I very much like this is like the most fun thing you can do in your life. But if you're gonna like get in a situation where like you're raising external capital, like it is a different thing than I think most people sort of take. And like here's the talk why we have it like on that way. It's like if you're managing other people's money and like not only like the sort of I think you always say this, like you obviously have like a dedication to like doing that, and you like have like a compliance burden, and you like have like rules that you have to follow, and like you're also just like you're taking on all the emotional like issues that come with like managing sort of external like people's money. So and it also like only makes sense at like scale. Like you need to raise a lot. I think like people like this idea of like, oh, I'm gonna go raise like a $15 million fund is like I think that's like the most misguided thing in the world, where it's like
no, you're gonna need to at least raise 100 to 150 million.
It's such a bad trade, and people like continually go out and like try and do it. And I don't want to like knock anybody, but I want to like have them just sit there and like do the math. And the problem is because they go like, well, they're like, yeah, well, like I'll touch this thing, and like then like it's not like there can't be a base assumption like this is gonna like trade, but people do it continuously. So
yeah, like, you guys explain that? I didn't fully follow that. Can you explain why that's such a bad idea?
Well, because like the overhead of it's just like it's not like a traditional venture fund. The amount of complexity and fees that you're going to have to pay service providers, lawyers, is much. It's like a multiple. And
yeah, you just have employees. You're going to
what's that threshold of when it becomes a good idea to have a fund?
I can say anything less than 50 doesn't make sense. And even then, you're probably you get like if you're like it tends to be like if you like have like a $50 million fund and like you make no money. Like it's like sort of like you pay yourself, like you make like a wage, but like it's a job, and like that's fine. But like it's not like this like and like yeah, you've got like upside on the whole thing, but I don't know. Like I'm less convinced that and it's only if like things like go well, right? Like you can have a situation where you got a $10 million sitting on FTX, and now you got a bankruptcy you got to manage 5 years, right? Like that's just like a situation like people sort of there's a lot of unknown unknowns that are all headaches for you, and like your life just becomes managing those headaches.
Hey everyone, quick break from Empire to tell you about another Blockworks channel that I know you're going to love. I've been in crypto full-time for 5 years and have always struggled with one thing, which is keeping up with the next big trend. As soon as I wrap my head around MEV, we're on to app chains. As soon as I wrap my head around app chains, we're on to liquid staking derivatives. I'm sure you've been there. Blockworks Research has solved that problem for me. Our team puts research, data, governance, proposal updates, models, and more into one really easy to use platform so I can always stay ahead of the curve. If I don't understand something, for example, I just pull up the platform, I can search for an L1, I can search for a protocol, pull up the platform at blockworksresearch.com, I search the term, there's always an amazing amount of insight in a really consumable way. Right now you can subscribe to the platform, it's $2,500 a year or $900 a quarter. Hopefully you can make more than $208 a month by using the platform, and you can't, you're probably in the wrong business. But if you're not ready to subscribe to the platform today, you can subscribe to the research team's free newsletter. You can follow their Twitter handles today. Links in the show notes. Trust me, once you do that, you're going to want to subscribe to the platform. If you are ready to subscribe right now, I got you guys with a little hookup. Empire listeners get a 10% discount for the first 50 people who use the code EMPIRE10. Got your back. Check out the links in the description to find out more. Now, let's get back to the show.
What about, you talked about like this, so historically, I think a lot of folks from traditional finance, traditional funds have said, oh, wow, like I can do a 10X. You know, you look at, if you're a venture fund, if you look at NVCA data, National Venture Capital Association data, like if you perform, like you would have been in the top quartile of a venture fund if you returned like 3X to your investors, something like this.
Yeah, it doesn't surprise.
Obviously, like as an asset class matures, like it gets more competitive and, you know, returns come down. If you were the first private equity fund, you know, you did a 10X plus. Where do you think crypto is in that trajectory? Like for the new cohort of funds that raised like last year, huge funds, like, you know, these are billion-dollar funds, Han, Venture, like Katie Hahn's fund, A16Z. A lot of these funds are sitting on billions of dollars. You talk about scale and size, but like, what is like, if you've been in the space for such a long time, like you're sort of in like preconditioned that anything less than a 10X is like a mediocre return, which is crazy, right? Do you ever like adjust your mental frameworks? Where do you think like the next 5-10 years, like what is the actual return potential of this asset class?
If you're just indexing it, like, I don't know, probably like 4 to 5X, like I'd have that probably. Like, I mean, if you're putting in like Bitcoin and ETH, it's probably then like 2.5 to 3X. Like, I think you just like keep like chopping it. Like, I don't know. Like, I don't like baseline assumptions of like the major assets anymore. Sort of on 10X. Like, if you're out there like firing into like the cutting edge or stuff and like you're willing to like take massive drawdowns, like, yeah, you can definitely like get there. But like, I don't know, just like as an index like sort of product of like, I don't know, because it's like kind of like what A16Z has become, right? Like they're getting crypto exposure to everything and anything. I don't know. I think that would be sort of my.
Like if there were an ETF, like you're better off putting an ETF than just paying $220. On a $2 billion fund. You're going to index the market.
There's just no
just my perspective.
ETF, right? That's the thing.
Correct. Which is there's scarcity value in those, so people get pushed to these vehicles. Yeah, so basically what you're saying, so crypto, a lot of what we talk about on the podcast is like the aggregate market cap. As an asset class, you know, you're at $1 trillion. You've been hovering around that level for a bit, chopping around that. You know, you're fundamentally saying that like you're getting to like maybe 5 trillion over the next 3 to 5 years. You know, assuming like the Bitcoin E2 like 2.5, 3X, and then the ratio of altcoins at some point grows over time, maybe new verticals, NFTs, whatever NFT, the next thing that is not NFTs encompasses some share. So is that a fair kind of mental model that you have, like 5 trillion?
Yeah, I think you go higher than the previous high, but like less high each time in percentage terms. Which,
by the way, would still be
it's a huge fucking, it's a ton. Yeah.
It's funny you say that because like when I tell people like the bullish case is like 5 trillion is a speck of dust for an asset class. Like the internet, like I get it, right? Like I know you're laughing.
No, yeah.
but it's still a lot of money.
The global M2 GDP figure that like people put in, like
5 trillion is a pretty big. It's like
it's like don't get me wrong, it's a massive number, but I guess it forces you to invert and say like, which is where a lot of people are really questioning it, especially in bear markets, is what's the whole point of this movement? Like, what's the killer use case? What's the enduring, lasting value here that you're delivering?
I mean, the pitch has always been, you're building a financial system outside the financial system.
Yeah,
That's
programmable money, minimizing counterparty risk, transferring value on the internet without counterparty risk seems like a killer use case to me. And it seems like a far bigger market than 5 trillion.
All right. So here, I just looked up because I was like, the current, so NYSE has 23 trillion of assets as of the end of the year. Like, that's the market cap of it. Would you rather own crypto or a quarter of all the stocks? Not all the stocks, but all the NYSE stocks. I don't know. That's like, there's a lot of companies making a lot of things.
I would take the stocks because of the correlation risk.
Yeah,
like,
that's fair.
But
50 years, like anybody's game.
the other argument you could make is, so you have a lot of tokens now. So like, I was having this discussion with another person. Like, it was like, and a lot of the best investors would tell you, like, the best strategy is just buy the index, like buy the S&P, because like the S&P, the composition of the S&P is constantly rebalancing. And so you didn't have to be right about AI. You don't have to be right about technology, software as a service, none of this stuff. But if you just had like a broad-based exposure, you would have captured that growth.
Right, because it moves in.
The question is, are you going to get that crypto, the same phenomenon that have tech becoming a much larger slice of the index? Is that going to happen for crypto, or is crypto going to continue to operate outside of, because, right now, the only kind of exposure you can get to crypto on the public side is Coinbase and a few other names, but it's not a lot.
Yeah, no, it's fair. It is like outside of it a lot more. No,
yeah. Do you think it ever, like, how many public crypto companies do you think we're going to see in the next 5 years? Blockworks, Anchorage.
Yeah, realistically, there should be like a dozen now, but like that's a whole other conversation. But yeah, I think you're looking like, I don't know, if we're at $5 trillion, there should be 25 public companies that have value.
Yeah.
Like, it's kind of wild if you think about how few there are and how big some of these businesses are.
It almost seems to me like if that scenario doesn't play out, then crypto is not going anywhere.
Probably not.
Yeah.
It definitely makes it slower for sure.
Yeah. So for my, I guess I'm not as familiar, but so you're just managing your own like prop capital, or do you have outside investors?
Right. We're just managing our own.
Okay.
Like, so it's like, it's a partnership effectively, like, and we just manage the partners sort of funds.
Yeah, that makes sense. I'm curious if you, like, talking to other managers, like, what's the sentiment out there?
It depends how you've done thus far, right? Like, it depends how tied in any of these like bankruptcies you are. I think there's a lot of guys that are in a situation where, like, I think so look, there's two worlds. There's some people that launched and like just didn't deploy a ton and like are in a really good spot where they have like a lot of like effectively like capital that they can still deploy over the next year. They feel great about things, right? Because they can like average in much lower into sort of everything. And that's either venture or liquid, but like that's the conversation mostly for like more the venture guys. So the pace of like how they deploy like very much. So people that have money to deploy feel great. They're like, this is awesome. Like, we're getting in effectively like at valuations third or half of what we were like thinking like we would be getting them in at. So those people feel great about certain stuff. People that are like too deployed and are like down a pretty good drawdown are like in a weird spot where like I think they have to start thinking about whether or not the econ makes sense to continue doing it. So I think those people are like in like a rough spot. I would say that's probably like a quarter of like all the funds that are sort of out there right now, where like you definitely get to a point where you look and you're like, all right, if you just for easy math, you raise 100 million, you're down 75%, you're at 25, like you got to 4x that thing to get flat. Like, you're not making any money until you 4x it. And like, if you're like a rational person, you're like, is this really really what I should be doing? Like, so I think like some of those probably those funds are kind of dead, whether or not they know it or not. And like they're figuring out what they do sort of on that side. But a lot of people with like dry powder that can and are like doing things over time, like they feel great about sort of stuff. So it really is it's the whole span of stuff.
Because what you said, I think, is really important that perhaps some people don't appreciate, but like this high watermark concept, like if you're down, and like if you're like a new allocator into the space, so say you want to put on risk, we're in this environment again, and you have two managers. One is a new fund, The other one is a fund that has a huge high watermark. Who are you going to give money to? Of course, there's other variables, but a big part of me, if I'm in that seat, I'm just thinking through the psychology and the pressure of that manager that has a huge high watermark and other capital that needs to clear the bar on. He's probably going to be more inclined to take stupid outsized risk versus the other manager that has like a clean slate. And so it becomes like this like death spiral of a fund that is in a tight spot. And you saw in traditional markets, it's fairly common. Like, what was that guy that was bet against like the meme stocks? Maverick, was it Maverick Capital?
No, was it
Melvin. So the guy closed shop because the incentive, you just kind of realize, to your point, it's really hard. And somehow like the market has like a short-term memory, and the guy's probably going to raise capital at some other point. But
I think he did raise a long-only fund and then got banged on Meta. I actually think that is like, it's like a 1-2. But you're right. Like the math, like it starts to not make sense, and especially in crypto because like the funds are so small. Like you're working on razor thin sort of like margins as it is.
And on top of that if you actually don't believe that we're going to have another 10x plus outcome for something like Ethereum, then it becomes extremely hard to clear the high watermark for many funds out there. Right.
Yeah, I mean, you done 75, you 10x the fund, you like effectively made like 2.5x your money or something like that, right?
Yeah, because in the last cycle, there was a few funds that kind of were able to survive this like high watermark despair. Like things like Block Tower.
Yeah.
Like,
they were all about
Multicoin came out of it. Multicoin, and like for Multicoin was like Solana was a huge like kind of like saving grace, Helium, and a few other bets, but the graph. But nonetheless, yeah, it's interesting dynamic. Have you seen? Yeah, it's hard.
It's harder now because the numbers have to get actually so big, right? Like you're not going from like 100 billion to $1 trillion in market cap. You're going from 1 trillion to 10 trillion. Like this, like, I don't know, like those big. It's just the law of large numbers, right?
Yeah. What do you think is just on this point? What do you think is the sweet spot for a fund? In traditional venture, like Benchmark, in my estimation, probably has been the best performing venture fund out there, but they've always kept their fund size the same, 250 million, I think. They've never raised more than that. And then you have an Andreessen who's become more of a, asset aggregator, raising billions and billions of dollars. You're wondering if they're playing a 2% game or a 20% game at that point.
Yeah. I mean, the 50 to 100 range seems kind of, if you keep the team small, if you're going to do stuff in liquid, though, I'd raise a ton. Because I don't know, you can just you can scale a lot of it.
Yeah, you could buy like easily a couple $100 million ETH in Bitcoin. Just top 10.
People have done it.
Yeah.
Hey Dan, speaking on the liquid side of things, how are you guys thinking about the LSD trade right now and like Shanghai in March?
Yeah, so actually there's a guy who works here at Coin, name's Eric, but he's Twitter is CMS Peary, who wrote like a really long thing up about
what is it? CMS Peary?
Yeah. He's got a Substack where he wrote a really good thing about like a thesis that I'll say like CMS's thesis on it is like what he wrote, so I would like defer to sort of his spin on it. But I mean, he's been very built up on Lido and Rocket Pool. I think that article is nice about Rocket Pool for sort of a bit now. I mean, it's like one of the few things where you can like see like the clear like product market fit and like the real like in the generation of actual like revenue or P&L or whatever how you want to call it, right? Like there's actual like economic like activity occurring back. So I think it's like a very easy one to like get to logically. So my answer is I don't know enough about what our answer is.
Yeah, fair. We'll link to this article. Do you have any take on like how you expect withdrawals or like price action to play out around Shanghai?
Yeah, I'm of the opinion that supply is probably not good to try. So I don't know. I think there's probably some like
get a little
jump on it. Yeah, I think it'll be all right. Like it's not gonna be the end of the world. But like if you come out and you're like this is bullish, I'm just like I'm out.
Sure.
I love how Dan just make it's like super simple like responses to a lot of like things that people over intellectualize. It's like guys, it's more supply. Like I mean, like the fair argument of that's like how much of that's actually priced in already, but fair, yeah.
Right, fair, but still, like I don't know, like.
Do you generally think that crypto markets are becoming more efficient, or like things like are just not they're just not priced in, or they're fully priced in? Like,
I don't think
this keeps coming up in like the Bitcoin halving events. Like it's always like no, like it's never priced in. Like
right, and then 3 months later it doubles. Yeah, I'm of the assumption that like it's the least efficient market still on the planet. Like,
and
I mean, like
this is why you're here.
yeah, this is like part of the big reason. Like, I don't know. I mean, like you generally have a primarily retail driven worldwide market that treats a lot of this like a casino, and like you get sort of irrational activity through that. I think like one of the big things that like people who come from TradFi that like come into this like market like make the mistake of is like they're overly rational sort of in their expectations of what things do, and they leave like a lot of money on the table. I don't know.
You have a great.
Whole, like,
I will always attribute. Yeah, I will always attribute with one of the greatest quotes I've heard. I mean, you guys produce some of the best memes out there, but perhaps the best quote is, "Do you want to be right or do you want to make money?" And
yeah, well,
so true.
It's supposed to be the best. Yeah, and the whole idea is like don't like I don't know. The market's telling you something, like don't fight it. Like it's like you probably even if you don't understand what's going on, like it is what it is.
Momentum trading or reflexivity or whatever you want to call it. It's worked well for you in crypto.
This is also why we don't go short anything for the most part.
I was going to ask you. Yeah.
It's just because like it becomes.
Plus, there's no borrow. I mean, like,
well, now
it's like super hard, right?
Yeah, now like you can't actually even like structurally do it if you want to, but just like also just because like things will act with like such irrationality to the upside, you just like you can't have that tail risk sitting around forever. Like I don't know, like how many people blow themselves up because they're like short something they're considered has no value, and it's like why even take the bet? I don't. Maybe some people do. Some people are much better at it, and I leave it up to them. I don't parlay in it.
Well, it's been a fascinating discussion. I don't know if there's anything else you want to cover that is on your mind or that your team is kind of actively looking at and want to share some alpha with the listeners.
No, well, I'll plug his Substack. Eric's putting a lot of time into it. So.
Yeah, we'll link to that Substack article.
Yeah.
Dan, cool. Who makes your end of year meme video?
Oh, Kevin does. The Intern.
Legend.
Yeah, he's great.
How must take him a month to put that thing together.
I think he starts around like early December and like sort of, but he leaves it open in case like stuff happens. This one was tough because a lot of the activity was like crammed in November. Yeah, so you had to like get it in.
No,
Dan, if you ever let go of this individual, please tell him to open a Gitcoin grant because we as an industry should never lose the prowess that your organization produces, which is fundamentally important for this industry.
He's never had a real job. He won't. There's no way. Don't worry.
Shout out, Kevin.
Yeah.
Oh, nice.
All right,
sweet, Dan. Well, appreciate you sharing your thoughts on the market and funds and all that kind of good stuff with us.